All right. Thank you all for coming. We're super excited to have a great high energy meeting today. Okay. So we have 4 agenda items for today. We'll start with a news briefing. Then we'll talk a little bit about our upcoming application. We'll do an intro to the finance rules, and we'll end with a short investment banking activity. Yeah. Okay, so for news report, would anyone or Max, you'd like to come up and report your news?
So I found this headline pretty interesting. It was Milton cost $245 billion, making it the costliest hurricane in U.S. history. So I'm sure as you guys have heard, Hurricane Milton is like one of the most biggest hurricanes so far recorded off the Atlantic coast. And so basically, the landfall of the storm surges from hitting Central Florida have caused lots of damages in houses and businesses, and infrastructure electrical stuff. So a lot of people don't have power right now, but also including the loss of Hurricane Helene. Insurance companies have also been having a lot of losses due to a demand surge for fixing infrastructure. And that has up to $30 to $50. So yeah. Thank you.
Great job. News report. So we have, if you're curious, you can scan this QR code, which links you to Max's article. Learn more. So now we have 2 other headlines. The first one is Lena Khan is just getting started. So she hopes. So if you don't know who Lena Khan is, she's the youngest chair of the Federal Trade Commission, or FTC. And the goal of the Federal Trade Commission is to protect consumers and promote competition by preventing unfair business practices related to deceptive marketing. So her goal is to regulate the business environment in the US. Yeah. So what she initiated is an antitrust lawsuit against major tech companies like Amazon, Meta, and Microsoft. And she also eliminated almost all non-compete arguments. Non-compete arguments are documents that employers sign when they leave their company to not directly work for a competitor after they are resigned. So for example, if I resign from Google, I would have to sign a non-compete argument saying I'm not going to go right away and work for Microsoft. And she eliminated that. So she blocked a lot of major acquisitions, which is what we'll learn about later on in the slide, including those by Lockheed Martin and NVIDIA, which are both major tech companies. Yep, sorry. Okay. And then overall, she really just cracked down on lots of companies, including big tech, big pharma, and big groceries. And then with the upcoming election, we'll have a better understanding of how her role will change and how the policies that she regulates impacts the market. Okay. And the second major headline is that Boeing, the aircraft company that has been a little controversial recently, lines up $35 billion in funds as a strike counter's finances. So Boeing is the world's largest aerospace company. They develop, manufacture, and service commercial airlines, defense products, and space systems. And recently, they withdrew the latest contract offer of striking workers, signaling potentially long labor dispute. And because of all these worker strikes, they have experienced 3 straight quarters of burning through all their cash. And also they have a bunch of issues with their commercial airplanes. So this has caused them to announce plans to issue a new stock as part of $35 billion liquidity plan to shore up its finances. So essentially, they just want to fix their credit score because right now they've been completely burning through all their cash. So, and the production of the popular 737 jet has essentially halted. So the company is delivering just one 737 plane this month. Yeah. Okay. And now we'll get into attendance. So you guys can scan this QR code and prove to follow that we have members so that and we also want to be able to tag everyone in our Instagram post. If you don't feel comfortable being tagged, let us know. But we want to make sure everyone knows how many awesome honorary dinners we have. Okay, and while you guys are doing that, Sophia can run through our newest application. Yeah, so as we recall the graphic that we showed yesterday and last week, which was our tiers of leadership. And one of the first tiers that we're introducing is our curriculum coordinator. So as a curriculum coordinator, you'll help with enhancing our curriculum, making our presentations better, and then also developing supplemental materials like case studies, articles, videos that can go along with our weekly presentations. So if you're interested in applying, you can scan this QR code. It'll direct you to more information about what the time commitment looks like, who the responsibilities to choose from. The application shouldn't take longer than 30 minutes and it's due next Friday. So if you have any questions, let us know, but it's pretty straightforward. And even if like curriculum coordinator doesn't end up working out, there's still other positions that will be coming, like a publicity ambassador and board members in the spring term. So you guys will always be honorary members. Okay, so the goal of this meeting, as you might have seen in the reel, is to break down this complicated Wall Street Journal flowchart on different career paths. So essentially, we make it 10 times more interesting, understandable, and applicable to the real world. Because that's just how we roll at once. So, in order to explain all of this, we're going to introduce a fictional company called Lumino Technologies. Meet Alyssa, she's the founder of Lumino Technologies. So some of you guys may know, but with the climate crisis, the only way that we're going to combat it is through renewable energy. Renewable energy runs on sources like the sun and the wind. But what happens when the sun doesn't shine or when the wind doesn't blow? You need batteries, specifically lithium-ion batteries, to store renewable energy power. So that when the sun doesn't shine or the wind doesn't blow, we can use that stored power to continue running the world with renewable energy. So what Alyssa's company does at Lumino Technologies is she provides these lithium-ion batteries to help all sorts of energy companies store their renewable energy. So Alyssa has all the science down. She's this really big genius girl boss. She knows how the chemical equations work. But she needs to actually deploy this revolutionary technology, right? Because science isn't impactful if it just lives in a lab. We need to learn how to commercialize it, how to put it into people's actual hands. Yeah. And this is where finance comes in. This is exactly where we need finance. So when the business first launches, there are 3 main stages, and these aren't official, but we broke this down for you so it can be more easily understood. So the first stage is the startup stage with early stage funding. So how you get early stage funding is from early stage investors, and there are 3 main early stage investors. The first is friends and family who ask who believe in you. The second is angel investors who are high net worth individuals and directly invest their own money into your business. And lastly, there's venture capital, which you might have heard of many times before, which is a type of private fund that invests their money into rapidly growing companies. So the last 2 angel investors and venture capitalists are part of the equity capital market, which we'll talk about later on throughout the year. So the way in which angel investors and venture capitalists funnel money into a startup is through the early stage funding. So there are many different stages. The first one is called pre-seed. This is when a startup has their initial product and they're developing it. They're making sure, for example, Alyssa needs to make sure that her battery works out in different sizes, that the materials she's using are working. And she needs to make sure that they run on the central efficiency. The next is seed funding. So this is when Alyssa has her product and her battery, and she wants to start deploying it to the first energy companies. It's her first time entering the market, as we call it. So she's taking this science and she's commercializing it. She's putting it into the market. Then we have Series A funding, which is when Alyssa's given her batteries to a couple of companies, but now she wants to grow. She wants to be able to have tons of customers, expand her customer base, expand the number of batteries that she's deploying to each customer. And then we have Series B and C funding. So this is all about even more growth. So I have my customer base. How do I increase revenue? How do I increase my profit margin? How do I make more money and create a super sustainable business model? And then there could be like Series D, E, F, G. It goes on for a while. But that's really what the early stage funding process looks like. So Alyssa has found huge success. Her batteries are used by almost every utility company across the country. She's no longer that small pre-seed stage startup that was asking for money from her family and friends. She's no longer going to angel investors. She has all the money she needs from venture capitalists. Now it's time to transition from the startup phase to IPOs, which stands for Initial Public Offering. And IPOs is when a company first launches to the public and its ownership shares are shared with the public. So what this looks like is second stage, expansion, when you go public. So in expansion, we enter the primary market, okay? So the primary market, what it looks like is my business, I need money to grow and develop my research further. Therefore, I'll contact investors with your hedge funds, banks, or mutual funds, and I will share my stocks directly with the investors. So stocks are ownership stakes. So I get capital to grow my business, and my investors own one slice of my business. And therefore, as it grows, they will have a return offering as time goes on. Then, after I finish establishing myself in the primary market, there will be the secondary market, which is what you guys have all heard of as a stock market. So what the stock market is when individual investors trade already issued stocks on the market between each other without any business interfering. Yeah. And one thing to note is the difference between a primary and a secondary market. So the primary market is when a company is initially going from private to public status. So it's that first time when a company shares a portion of its holdings to external investors. The secondary market is when these external investors sell their shares to other external investors. A lot of people talk about the stock market, but they don't realize that in order to get to that phase, we need to start with that initial selling in the primary market. And then finally, we'll talk about maturity within the public market. As you know, companies listed on the public stock exchange are of all different sizes, and the goal is to grow as big as possible and be as successful as possible within the public market. So let's imagine that Alyssa has this super big plan. She wants to create a green energy storage hub in Mexico, creating the largest battery storage facility in the country. And this would require $150 million. Now, those resources can't simply come from the public stock market or their external investors. She needs to turn to a new form of acquiring resources for such a big project. So this is where commercial lending happens, aka loan syndication. Because my fund is too big to ask for individual investors or different types of funds, what commercial lending needs is that I will go out to banks, and multiple banks together will join and form a lending syndicate, which is where they form groups to provide funds for my business, which helps lessen the risk of their investment and help them take part in a big, large-scale operation. Yeah. And one thing to keep in mind is Alyssa said something very important, which is reducing risk. The reason loan syndicates are formed are because even if I'm a bank and I have the capacity to give Alyssa for $150 million, I'm not going to want to take the risk of investing a whole $150 million and then the project fails and I lose all my money. So what if I took 10 banks and I split that into $15 million per bank? That reduces the risk of me giving Alyssa all the money and then losing all my holdings. So now Alyssa has found even more success, and she's like, yeah, my battery energy storage hub is thriving in Mexico, and everything's going to plan. Yeah.
Oh. Okay, so the bank's loaning cost money is very similar to investment, where when they invest in my company, they'll give back the principal value and interest. So once I become a successful company, I can pay them back in whatever time frame they want.
Exactly. So this is initially paid to the base interest for giving her the loan.
And the principal value means the original value that the banks gave to me. And then what the banks receive is principal plus interest.
Yeah. So if the project fails, that she can't pay that back. And so if I put in my $150 million and Alyssa's project fails, she can't pay me back the principal value and the interest. That's why it's so important to diversify the risk.
Yeah.
And then finally, we'll talk about mergers and acquisitions, also known as M&A.
So my company is the lithium storage company in the world. And so Sophia's company, Lithium, is the best lithium producer in the world. So therefore, I want to collaborate with her. So how this works is by combining efforts with Sophia, I can share both of our resources, reduce duplicate operations, and be more efficient. I can get new technologies, products, or expertise that I just don't have right now. And I also reduce competition and increase my market power, which ultimately increase my stock prices and allows investors to invest more in my company and gain trust in the market.
So there are two ways that we can go about forming collaborations between my company and Alyssa's. The first one is a merger. So this is when two companies of a similar size and scale combine into one. And then the second one is an acquisition. So this is when one business buys another often smaller business. So if you think about it, in a merger, two companies are combining into one. In an acquisition, I, the smaller business, get followed by Alyssa's business, and I'm under the Alyssa umbrella now.
So in an acquisition, with a smaller business, it'll keep like, would it keep all its like staff? It's just under an umbrella, or would it be like now like completely white, like new boss, new everything, and just like one thing, or would it still be two smaller business or two different businesses, one's just under the
So it's case by case, but you're right. Often the staff works under the larger umbrella. And what we see a lot of the time is when a company gets acquired, the founders of that company have some sort of contract where they have to work under that larger umbrella for a given amount of time in order to receive the money for the acquisition. So for example, if I'm the founder of my company, Alyssa will tell me, okay, Sophia, I'm acquiring you, I'm paying you $100 million for your business. But if you want those $100 million, you have to work for me for at least 3 or 4 years. Does that make sense?
If you're under those, I'm just a regular employee, do I have to stay on those? If I get acquired, then I have to be there?
It depends. It is really case by case because different mergers and acquisitions will have different terms. And we will actually talk about this later. Wait, can I just get this right now? Yeah. So after mergers and acquisitions, there will be investment banks to provide services to make sure that my company and Sophia's company gets the most profit out of the deal. So because we want profit, the terms might change and it's very company specific. So in one case you might be the same, another case you can just leave. Or a lot of times when merger and acquisition, if it's not like a harmonious mix,
then a lot of employees will quit.
Yeah, it's not always pretty, especially in an acquisition, because I'm giving up my power to Alyssa. But that's a really good leading point. So there are many different types of investment banks. A mergers and acquisition or an M&A investment bank is essentially the intermediary between the two companies that are being merged or acquired. So their job is to ensure that that happens successfully and smoothly. And M&A groups, they take a cut of that merger or acquisition. So say that our two companies, when they were merged together, was like $100 million. Then the M&A investment banker that was helping out with that merger would take maybe 5% of that. So $100 million. M&A groups that are well known include Goldman Sachs, JP Morgan, and Morgan Stanley. And then we have loan syndication groups. So again, recall that when Alyssa wanted to build her green energy storage hub, she went to a loan syndicate and she received money from there. So what loan syndication groups is, they are responsible for putting together all of these banks and creating the group. So for example, we have Bank of America, JP Morgan, Citigroup. Alyssa could have gone to Bank of America, for example, and been like, I need you to help me assemble a loan syndicate group in order to fund my $150 million. And that bank is often one of the banks in the loan syndicate group, and they often hold the most share of that loan syndicate. So they might pay like $30 million of the loan syndicate, whereas the other members would pay $10 million.
Yeah. And then the last one is capital markets. So equity and debt, like merger and acquisition groups. So what they do is they raise funds by structuring the bond offerings to different types of investors. So this is what we talked about earlier with the equity capital markets, with the angel investors and venture capitalists. So they structure the bond offerings so that everyone gets the most profit and everyone is helped from this deal. So for debt capital market groups, it includes Citibank, JP Morgan, and Bank of America. And for equity capital market groups, it's Goldman Sachs, Morgan Stanley, and JP Morgan.
So then, okay, first of all, does anyone have any questions about the overall presentation? Yeah, Mayari?
I want to know, like, during a merger acquisition, or whether it's like accruing funds, how exactly does like each side account for liability and other things that they like?
That's a really good question, and that's further emphasizes why the M&A group of the investment bank is so important. So when two companies want to be merged or acquired, the role of the M&A group is to stand in the middle as an intermediary and ensure that both sides agree to the same legal accountability in terms of the deal and to the same amounts of money. And that also relates to your question about, okay, if I'm acquired, I have to spend 4 years working for that company. That's part of like the legal issues that have to be sorted out. And that's why, again, investment banks, the M&A groups specifically, are intermediaries and really important to the legal aspect.
Sorry, so when two companies merge, is it usually like we'll do the M&A, but will they like talk it out and like have like not two CEOs instead, or like how does that work?
So I definitely think we'll go more in depth to the whole process of merging in one of our following meetings. But it's usually the investment bank, the company that's being merged, and the other company. So it's the two company CEOs and the leadership team, and then the M&A group. So we have three parties, the intermediaries, the two companies, and it involves a lot of deal making and difficult conversations, because think about it, like both Alyssa and I want to make as much money as possible. But then also the investment bank will make more money the bigger the deal size is, and the investment bank wants a larger cut of that deal size. So everyone's trying to get their money, and it's a three-party issue, which we'll talk more about.
Yeah, but don't worry if like any of these concepts seem like a little bit like far away or just like not super clear to you, because over the next few weeks we will go in depth about every single topic we cover here, but this is just to give a general overview, just to give you a baseline foundation of what to expect and how like the business process works. Yeah. But good job for asking questions.
Okay. If you don't have any other questions, we'll move into our final activity. So if you were here last meeting, we kind of usually split into groups. Today we'll have 3 groups, and the goal is for you guys just to find out a little bit more about one of these investment bank groups. So, all right, everyone. I hope that was a sufficient amount of time. So now we're just gonna go around each group, and you guys can share a little bit about what you learned. So you can start with M&A.
Oh, yeah, so, in 2005, we acquired Skype, but it didn't really go well, so eBay actually started Microsoft. So part of the reason why Skype is part of Microsoft right now, it actually earned 1.4 billion for this. Well, probably off what Sophia said, Microsoft is actually made over 200 acquisitions. And some of the biggest ones include acquisition, LinkedIn, right? And yeah.
Okay. And then like what does the M&A investment group do in those acquisitions? Yeah.
We kind of just help like with between the 2 companies and facilitate them, and like especially with like legal things, that like most M&A groups have a way to a lawyer that will help out legally in the process to make sure that everything's done right.
Okay. And then we can move on to thank you.
And then Wallstreet group.
So, like you guys discussed, one communication is when you need a large amount of money, you go to, usually money bank, but you go to a group of banks and you ask for a loan, and they give you that loan. Then you have to pay back that loan in a certain period of time and pay a kind of rate of based on the loan. And we're talking about participation loans. Would you like to so participation, you guys can have is when there's you ask for a loan from one bank and then that bank has a responsibility for the proposal should go to the bank and share that and towards the
I guess participation loans, they kind of lower the risk and also you can, I guess, because like get some money from the banks. Yeah, some of the person fails and like not pay it back, you can pay back all the other banks and then profit on this like bankruptcy. That's my question. So, well, I was like looking up, I saw the term diversifying your portfolio and something like that.
Ooh, that's it. Does anyone know the answer to that question?
It's like everything is multiple types, like you know, only like also like education. So in case like the tech industry, suddenly you don't lose all of your money, you still have like your eggs and so you don't think you go there.
Okay, that makes sense.
Nicole, did you want to add anything, or is that solid?
No, that's all I'm saying, sorry.
Okay.
I mean, and also the companies, but like personally, the first time is more by us, not just like doctor farm, but also real estate. Also,
Nice. Wait, that was great. Is there anything to add? Yeah.
I was gonna say, like, maybe diversify your portfolio also gives your firm credibility. Yes.
One of the most.
Awesome. Okay. So that capital market investment banks, what do you guys want?
Instead. It's like basically like you're just like it's where people buy and sell that aka lend or borrow money, like stocks and bonds and other things like that. And then that capital markets investment banks, they kind of what they do is they kind of just like facilitate all this.
And make sure like I was right, but like that. It's wrong. And you have to like get it back, like it's not stop, it's really.
Sometimes these like companies that say like long-term planning.
And it's like helpful so the company has more capital to accomplish its.
So, you know how like, when you make sense, so like, you have like, you have a bigger stake in your company instead of like having to go over what part of it. And also like, when you need to pay them that much tax, because like tax is based on like how much income you get. So if you get like more of that, that means you don't need to pay that much.
Yeah. And then finally, equity capital market.
So basically what we came up with was, the market's kind of like where like stocks are like exchange and like there's like a communication between companies and you can buy a share, which would be like you own a living art. It's like, you guys only gonna want to like buy a stock of like Disney or like Lululemon and like you do that and you like a little bit of the owner. And once you sell away the stock, then you can like, usually like they start having producing, you know, make money from it. So it's like why like you don't buy and sell stock, like.
And then I mean, I would say, kind of like, if you buy stock, like you get like, equity in the company, so you have a certain like percentage, I don't know, of the company, or share of the company.
That was really good. And these two are probably the most complicated. So when we do our meeting just on investment base, we'll be able to go a lot more in depth. Yeah. Thank you so much.
That concludes the Women Finance meeting for today. Thank you all for coming. See you next week.